I really think what's changed is actually stablecoins. Is that all of a sudden, really for the first time in history, anyone with internet connection can access the dollar. It's really incredible when you pause to think about it. This is the largest expansion of the dollar's network effects in decades. And this has created a brand new demand for global financial services. And as a result, this is why decentralization all of a sudden matters, right? It's only because of decentralization that you can have global access, that you can not be censored by a government or any entity. It's only because of decentralization that you're able to trust putting your life savings on a platform, knowing that no one can take it away from you. And so I would say the circumstances have really uniquely highlighted why decentralization is important and kind of reminded everyone, again, why decentralization is so important. Decentralization is not for decentralization's sake. It's so that you can have a completely trustworthy and secure system.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show features Maria Shen and Sanjay Shah from Electric Capital. So the team at Electric Capital recently published a report called Beyond Stablecoins, the Case for Ethereum. The report is very timely given this talk about stablecoins being the ChatGPT moment for Ethereum, for crypto, I think in general. Basically, this report lays out in detail why the growth of stablecoins is not only good for Ethereum, the network, but it should lead to value accrual for ETH, the asset.
Yeah, and I think with this conversation, we kind of unearthed a lot of the almost like intangibles or like hidden value metrics of Ethereum and ETH, the asset, that I think have been hard to quantify. And we walk through a lot of what those are. And we kind of just key in on, I think people are starting to value these things now.
So something I have been tweeting out is if you want to be long stablecoin growth, you need to be long ETH or something to that effect. This is a podcast to walk you through the detail on why that is the case. And again, all credit due to Electric Capital. The report here is a really easy read. I'm hopeful that this is an episode that you can easily share with friends. I don't think this is an episode where we go too deep into the weeds, but I think the story is very compelling for investors, whether you're, an investor who has hundreds of millions of dollars or whether you're, a retail investor just getting into the crypto space. So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to stay up to date on all of our new posts through the Edge newsletter, but also get real-time notifications for the Edge podcast. You can also subscribe directly to the Edge podcast through like Apple or Spotify or YouTube. If you go to our link tree, it's just edge_pod. But then otherwise, one final shout out to our sponsors. Thank you to the sponsors that make this show possible. All of the content that we make here through the newsletter and through the Edge podcast is always free. All you have to do on the newsletter is just submit an email. So everything is ungated. And if you go to our show notes, you'll find all of the awesome sponsors we have, folks like REDSTONE, Maple Finance, and so forth. So check them out, click on the links and learn more. And we hope you enjoy the show. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over 1 billion in AUM across USDC and BTC products. And now with SYRUPUSDC by Maple, anyone can earn institutional grade yield. Learn more at syrup.fi, and thanks to Maple for supporting us here at the Edge Podcast and Edge Newsletter. Falcon Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. All right, let's introduce Maria Shen and Sanjay Shah from Electric Capital. Maria and Sanjay, welcome to the Edge Podcast. How are you doing?
Doing very well. Thank you for having us.
So you recently published a report called Beyond Stablecoins, the Case for Ethereum. I think the TLDR of the report is that demand for stablecoins, the growth of stablecoins is good for Ethereum, but also very, very good for ETH, the asset. And so we're excited to kind of like dive into that thesis and understand it. Clearly, I am a longtime ETH holder, and so very grateful to have you both on. Why don't we talk, though, a little bit about Electric Capital, just to kind of set the table for folks that don't know about Electric Capital or realize all of the work your team has done over the years contributing to the space as investors.
Sure. I can get started with that question. So Electric was started in 2018, and I would say we're pretty unique in that almost everyone at the firm either has a technical background or have started their own companies, started their own projects, or were early at companies. And that really changes the way that we look at the space, the way that we work with founders. And so as a result, we're very public goods forward. So you may have seen our report on open source developers, for example. So we put out a developer report every single year that looks at the number of open source devs in Ethereum and Bitcoin and other ecosystems. We've put out search engines for smart contracts called CodeSlaw. We try to publish and be as open as possible with our research. And of course, this includes our ETH thesis as well.
So kind of before we dive into this piece that you both co-wrote, I'm just curious, maybe like what prompted you to write this, and who ultimately is this for? Like who does Electric Capital write a piece like this for?
Yeah, maybe I can start with this. I think there's probably two reasons that we sort of went down this avenue of writing this piece. One is that I think we sort of saw that, maybe people were sort of missing the forest from the trees with sort of the dollar story, right? You see all these headlines, especially after what happened with Russia, that, countries are sort of moving away from the dollar and reducing dollar reserves, and developing alternate payment rails. And sort of there's this like larger story that's unfolding that I think wasn't being paid attention to. Now it's getting a lot of press, but wasn't being paid attention to, that actually there's 4 billion people around the world that want dollars because, their currency is inflating, or there's political instability. And you can see that in the data with stablecoins. And so we wanted to sort of just draw some attention to that. And it's just really interesting, how this like bottom up grassroots demand for dollars is actually like in just total contrast to the sort of like top down clampdown that we're seeing. And then I think the other reason that we, wrote this piece was, we've been longtime ETH, bulls, or we've had conviction in Ethereum and ETH asset for a long time. And I think, there was a real sort of like loss of hope, it felt like, in the space in like April. And I think we wanted to, at least say like, hey, we actually really believe this, believe in this asset and believe in this network. And let's like really remind the community why we're here and why decentralization matters and why ETH is very valuable. So I think those two reasons.
Okay, so one point that really stood out to me that you touched on, Sanjay, is, and again, I heard all of this the past couple of years, like, oh yeah, the BRICS nations, they're getting away from the dollar's toast, but you said it here and you point out in your piece, there's like 4 billion people that would love to get a hold of dollars. So maybe just go into that a bit deeper, just this latent stablecoin demand that is still out there that is totally unsatiated at this point in time.
Yeah, it's remarkable. So the data we talk about this in the piece is that stablecoin supply has increased 60x since 2020. So that is an astounding number. And, the sort of stories behind that number are, there's a farmer in Nigeria that, the Nigerian naira has devalued 90% over the last 10 years. It has an inflation rate of, I think, about 30% at this point. And so, that farmer doesn't know where to essentially hold their savings in a way where they can protect their wealth over time. And so they increasingly turn to stable coins. And so those type of stories are the stories around the world that's driving demand for stable coins. And it's the proof is in the pudding when you see the numbers. It's incredible.
I think the type of like on-chain user that we're most familiar with, of course, is like peers like us who, are, let's say like longtime crypto DeFi power users. But I think what you're speaking to is these are like net new digital dollar holders, stable coin holders. I'm wondering then if we can just talk a bit more about like, how are these stable coin holders, whether it's a farmer in Nigeria or whether it's a nomadic DeFi dad, like how are they seeking yield? And I guess why is Ethereum in the best place to serve those needs?
So, there's one thing about holding dollars, right? You get dollars and you can like protect your savings. But then you want to do something with those dollars, right? We don't all want to like stand still, right? We want to keep moving. We want to make our money work for us. And so that's where, these stablecoin holders, they want to earn yield. And of course, Ethereum has the most mature DeFi economy. 65% of DeFi TVL is on Ethereum and Ethereum L2s. And so it's a natural place where you can go and earn yield on these dollars. And so you can lend out. You can lend out on lending protocols. You can earn yield in liquidity provisioning. You can earn yield by contributing to real world asset protocols and actually making loans out to people in the real world. So there's lots of ways that you can go on Ethereum and actually make those dollars work for you. Why is Ethereum the best place to earn yield? Well, I think that answer probably has like two answers, which is one is like, why is Ethereum the best place now? And I touched on that: most liquidity, most stable coins, most mature DeFi market. And why is it going to continue to be the best place and be the best place in the future? And why it's going to be the best place in the future is because some of these properties that Ethereum has, right? So Ethereum, we think, is like the only safe chain for institutions to build on at this point in time, right? It's secure, it's reliable, it's regulatory compliant. And so we think institutions are going to build products on Ethereum more so than they are on other chains, which is going to allow Ethereum to retain its edge. We think it's the only chain that's really, truly resistant to government interference. And so we think that is going to be a big point, because as stablecoin adoption increases, we think that governments potentially may want to restrict stablecoin access, and Ethereum provides the most censorship resistance. So there's sort of like, why is Ethereum the best place now? And then there's why is Ethereum the best place in the future?
I think one really interesting thing is because we track developers so closely, what we've seen in the past couple of years is Nigeria, India, these are countries with the fastest growing crypto developers. We saw that in our report last year. And so in speaking to some of these developers, I remember talking to developers coming out of Nigeria and saying like, hey, why are you building an open source crypto? A lot of them are doing so because they and their peers are already using stablecoins. And they want to come in because they want to build the system that they themselves are using. And if you look at this new class of stablecoin holders, this is a very different class of people that's existed before. This is a truly global class of people who are coming out of every single corner of the world, anywhere where there's currency debasement, anywhere where there's financial insecurity. And so it's created this demand for a totally new type of financial system. And this financial system absolutely needs to be globally accessible. So if you're in New York, you can access it. If you're in Nepal, you can access it. If you're in Nigeria, you can access it. It has to be safe for institutions to come in. It has to be resistant to government interference. And what we really dive into in this paper is just how difficult it is for any platform to really fulfill these three requirements. But Ethereum is incredibly unique in being able to do exactly that.
One of the talking points that I think was irritating to Nomadic and me the last several months and really the last few years is that Bitcoin for us has always been this special snowflake where, we talk about the fact that it's difficult to change it and that's what makes it so amazing. And that it as a digital gold store of value, the fact that it is uncensorable and so decentralized is again, just what gives it its value. Meanwhile, I would look at Ethereum as the leading smart contract platform, and it would feel basically everyone in the market was talking about how the next smart contract platform is going to eat its lunch, that the fact that Ethereum was as decentralized or uncensorable, that these are benefits or features that they will achieve in the future. But what we need right now is the fastest, most high throughput chain. And so it's been refreshing recently to notice that the market has clearly changed its tune on devaluing those important parts of Ethereum. And I think what I'm meaning to ask is what has changed? Is it just that the price went up for ETH and that sort of fixes the whole narrative, and now the market is celebrating the uptime of Ethereum over 10 years, the decentralization of Ethereum, the fact that it is uncensorable? These are reasons why I have continued to buy and hold ETH for many years, and why I have believed that Ethereum is, to your point in the report, is the only defensible network for institutions to be building and deploying stablecoins on. So yeah, what's changed? Is it just that simple? Is it price kind of fixes everything?
I really think what's changed is actually stablecoins. Is that all of a sudden, really for the first time in history, anyone with internet connection can access the dollar. It's really incredible when you pause to think about it. This is the largest expansion of the dollar's network effects in decades. And this has created a brand new demand for global financial services. And as a result, this is why decentralization all of a sudden matters, right? It's only because of decentralization that you can have global access, that you can not be censored by a government or any entity. It's only because of decentralization that you're able to trust putting your life savings on a platform, knowing that no one can take it away from you. And so I would say the circumstances have really uniquely highlighted why decentralization is important and kind of reminded everyone, again, why decentralization is so important. Decentralization is not for decentralization's sake. It's so that you can have a completely trustworthy and secure system.
Yeah. But let me add to that. I think the special snowflake meme is really funny with Bitcoin. And, you hear oh, Bitcoin is a special snowflake. And then you hear people being no, it's not a special snowflake. My take on that is Bitcoin actually is a special snowflake, but ETH is actually a special snowflake too. And you can have two special snowflakes. And why is ETH a special snowflake? I think it's worth maybe just talking about this for a second. And we talk about it in the report, which is the decentralization that ETH has. I don't think the way it has been achieved, it's uniquely based in the way it was originated. And so it is like the only major, outside of Bitcoin, the only major programmable blockchain that is, or the only blockchain, the only programmable blockchain that is community funded. No VCs, right? Which is a big deal, right? Because when you have VCs, oftentimes you have like large allocations that are being held by those VCs. And the other thing is, it's the only programmable blockchain that started as proof of work and then migrated to proof of stake. Nowadays, all the blockchains started proof of stake. I don't even think we see any attempts to start at proof of work anymore. And that's a big deal because when you start as proof of work, what happens is the ownership of your asset becomes way more distributed because miners have fees, they earn their mining rewards, and then they sell a portion of those to cover their fees, and so your asset gets much more distributed. So the combination of those two things, the community-funded launch and the proof of work origins, are two things that I think are a real moat for Ethereum when it comes to how distributed and decentralized it is. And the other thing that I think is Ethereum's culture. Culture, we see this in companies all the time. Culture is something that is it's hard to put your finger on because it's very hard to copy a culture. You could see it, you could be like, I want to be like that, I want to have those values, but it's really hard to build that in. And Ethereum has had these principles of decentralization, of censorship resistance above all else from the beginning. And we've seen other protocols take, a little bit more of a pragmatic approach where, we're going to go for, fastest transactions or cheaper or whatever. And I think it's really hard to back into that culture that really says like, no matter what, we're going to die in the hill of decentralization. And I think Ethereum has that. And I think that also is a moat. So I think those like three things, like the community funded, the proof of work, and the culture, are things that really make Ethereum like another special snowflake.
Yeah, huge plus one to that. I think Ethereum's fair launch at this point in time is almost impossible to recreate. And even with proof of work, if, back in 2015, in early days of Ethereum, you could buy a mid-range GPU and you can participate. You can mine on your own. You can mine in a pool. Now that's just not possible anymore, given where hash power is at. And in Ethereum's community fundraise, people from over 130 countries participated. It was truly a global phenomenon. And every single person paid the same price in the beginning. It's at this point in time, if you look at any chain launching like that, it feels very difficult to recreate those conditions.
This episode is brought to you by Mantle, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, Mantle is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow Mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's Biddle and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi.
Yeah, and just to hammer home a few other things directly from your piece, you call out there's 1 million plus validators across 100 different countries right now. And then another thing that I think you can take for granted if you come to this space, and it takes time to get up to speed on some of this stuff, like why it's important, but there's tons of independent developer teams. There's Ethereum has client diversity. You can just go on and on about the robustness. And to Sanjay's point about culture, like that culture that believed in something helped build this. And you almost need something even more valuable than the money incentive to build something like this, in my opinion. You can't just buy this. So yeah, I think you guys kind of call all that out really well in the piece, but I want to switch to something a bit different now. I want to get to this idea of ETH as becoming this reserve asset, this new digital dollar that powers this new digital dollar economy. So maybe one of you can just briefly explain what you mean by reserve asset, and then how does this happen?
So a reserve asset in kind of our traditional system would be U.S. Treasuries, it would be gold, it would be stocks. A reserve asset is any type of asset that's trusted, it's liquid, people use it for savings, people use it for collateral. And so now that we have this new global financial system being built on Ethereum, ETH is naturally the reserve asset for the system. And it's because ETH is highly liquid. It's generating yield. It's trusted. It's censorship resistant. And we're seeing that play out today. ETH is the biggest collateral type in decentralized lending. And so as demand for these financial services grow, demand for ETH grows as well as its reserve asset.
So plus one to sort of what Maria just said. And essentially, we, to spell it out, we see like essentially a link between stablecoin usage, DeFi activity, and the value of ETH asset. So as more people hold stablecoins, they want to earn yield on that. So there's more DeFi usage. As there's more DeFi usage, there's more TVL in DeFi, which requires more collateral to back it. And right now, the major collateral asset, as Maria said, is Ethereum. So that leads to a greater demand for ETH. And that greater demand for ETH should, increase the value of ETH asset. So that's sort of the link that we see when it comes to how does stablecoin adoption actually affect ETH, the asset. There's another sort of piece of it, which I don't know if you want to touch on now or later, which is we also see ETH as really being positioned to become a store of value asset. And so the more that ETH is being used as a collateral asset, DeFi, we also think that it also becomes sort of a store of value asset, yield-bearing store of value asset. And so then there's kind of this flywheel where it's used more as a collateral asset, which makes it seen more as a store of value, which then makes it increasing the use as a collateral asset. And there's that flywheel that helps increase the value of ETH.
Recently, we've been having guests on to talk about these ETH treasuries. So these like stocks that have pivoted to an ETH treasury strategy. And obviously this is like, tangential to like this whole conversation about the demand for ETH and that demand from stablecoins and how this all comes together. I guess, is this a bit of like a white swan? Like, were you foreseeing that there would be this kind of a bid for ETH? Because just the stablecoin demand, which again is like our focus here with your report, that alone is, a trend that is sustainable that we've been extremely excited for. Like we see exponential growth for stablecoins on chain, specifically on Ethereum, but this new demand for ETH, on the order of, billions of dollars in just a few months, like this has sort of caught us off guard in the best sort of way. So anyways, I'm wondering, like, were you already, I guess, considering the impact of these ETH treasury strategy stocks alongside this report, or like you might have already like wrapped up the report as you were publishing it?
Yeah, it feels like this last month like has been like 2 years of activity like combined. So things have been moving rapidly. I would say that, and Maria, please jump in after. Which is, I would say that I think we had no doubt that at some point in time, companies would then, look at BTC as a treasury asset, and then eventually say, well, hey, ETH has essentially a lot of the same properties as Bitcoin, scarce and divisible and censorship resistant, and all of these things that make it a better store of value asset, but also has yield, right? And so eventually, I think we sort of, bet that companies would get there, that they would get there this fast and in this sort of this violently, I would say. I don't think that we anticipated that. So it's been refreshing to see that there's been a pivot this quickly and this early.
I think it feels inevitable. It's just a matter of time. And I think the timing really did work out. But, I think for us, it's always felt like the financial system is there on Ethereum. And it's been battle tested. It's not new. It's been battle tested through extreme, like market stressors. And so it's this place that's already available for people to put their capital, and always felt like a matter of time before people really did.
I think in my own portfolio, one thing that over the years I've really come to understand is that, I'm managing my own portfolio and I'm thinking about where am I going to deploy capital? And I grew up in a very middle class home. I don't come from money. And so anyways, as my own portfolio was growing over the years and I'm thinking about where to deploy or to hold stable coins, I'm running through my own risk framework. Nomadic and I are talking about where are we willing to risk capital to earn yield? And we had come to a very clear conclusion. Ethereum mainnet is it's not risk free, but it is clearly the safest place for us to be deploying in truly battle tested DeFi protocols like Aave, which have been running now for many, many years. But the uptime of Ethereum, the assurance that I will be able to wake up in the morning and have property rights to those stable coins is huge. So I've been, coming to the realization that as much as I think I assumed for many years that whatever I was doing was probably very simple in comparison to those that were, managing hundreds of millions, if not billions of dollars, I think, it is a realization that a lot of the decision-making that I've gone through, a lot of the risk frameworks that I've thought through are definitely mirroring what major capital allocators are thinking through. And so this is where I think we felt some edge earlier to understand that, hey, the one place that stablecoins are going to grow more rapidly is Ethereum. It's just too easy to deploy. BlackRock is happy to put capital on Ethereum. Coinbase deploying their own L2. Robinhood now being one other iconic worldwide known name deploying capital there. And so I think what I'm wondering though is just because of how big Electric Capital is, and as an investor and the types of conversations you have, are you able to share just details from conversations you're having with institutional type investors? Do they see holding ETH as being long stablecoin growth? I feel like that's the takeaway from your report for me, is to be long ETH is to be long stablecoin growth. But I have long wondered again, are the major capital allocators of the world, are the institutional investors of the world, are they understanding this? Are they finally starting to get this?
I really can't speak for all of them, but I would say that they're beginning to see this trend. I don't think that the thesis that this connection between stablecoins and ETH is exactly clear, but I think everyone is seeing this tremendous growth in stablecoins. And I think the next step is then realizing, oh, well, an overwhelming majority of stablecoins is issued on Ethereum. And Ethereum is the most decentralized, it's the safest, it's the securest. We've been talking about this. So I would say institutions are moving toward that. Hopefully this helps establish the connection a little bit more. I don't get the sense that it's consensus yet, but I think it's a matter of time as people are thinking through it. I think the decision-making framework is, hey, stablecoins is clearly real. It's clearly growing. How do we participate in this? Certainly not by holding stablecoins, which is going to always be stable. And so, I think the decision is, do you participate through perhaps investing or holding some tokens in DeFi, in which case it's very similar to stock picking, right? Or very similar to venture investing, and you will have some hits and you will have some misses. Or you can hold ETH, which is the asset that's really underlying this entire system, the main collateral type in the system, the asset that secures the system. And so I think people are beginning to come to that realization.
Yeah. Plus one of that, I think that the first step in sort of this link of, okay, stablecoin growth leads to ETH growth is for people to realize that stablecoins are a thing. And that, I think, has really happened this year, to the point where like my 80-year-old dad is, telling me about stablecoins. And how do you know about stablecoins? And so I think that people are now very aware. Now payment providers are, integrating stablecoins, Stripe, PayPal, etc. So that story, I think, has become very clear. And now the move from that to, okay, the way to participate in stablecoins is Ethereum. I think, as Maria said, I think we're just beginning on that sort of part of the journey. But I think sort of like phase 1 of 2 is sort of like well underway, and hopefully phase 2 sort of picks up speed.
Hey folks, I want to tell you about our sponsor, Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. Rumple Labs is revolutionizing DeFi. Rumple lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using Rumple to unlock instant liquidity and maximize their yields. So join Rumple today and start spinning your points into gold. Learn more at rumple.xyz. Say hello to Puffer Unify. Puffer Finance is expanding beyond native liquid restaking with new products such as Unify-based rollup and Unify Pre-Confirmations AVS. Unify is not just another L2. Unify is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer Unify. Puffer Unify is fast, capable of sub-second transactions. Unify also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on Unify. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi. So one of the final chapters in your report here, the conclusion says, holding ETH is likely the best way to gain exposure to the growing stablecoin economy. And you talk about this flywheel, with growing demand for stablecoins, more stablecoins put to work on Ethereum, greater use of ETH as collateral, ETH price and Ethereum security strengthen, and then more institutions build products on Ethereum, and then just continues into the growing demand for stablecoins. Can we talk just really briefly about the challenges that alternatives face? Because I think one of the reasons that I am so confident in Ethereum continuing to grow and be like a king of this vertical for stablecoins is just the challenge that others face in replicating this flywheel. So just if whatever you can do to sort of dumb that down for us, because I think the narrative the last few years that I keep sort of touching on or referring to is that there's been this narrative or talking point about the fact that we need, the fastest chain, we need the most high throughput chain. And for whatever reason, Ethereum L1 got beat up for actually executing on the L2 roadmap. And so for some reason, again, these misinformed takes of comparing Ethereum L1 to other high throughput monolithic type L1s, it didn't make any sense to me. We should be transacting more and more over time on L2s, but then there's these high value transactions like the BlackRock Biddle Fund, what they're doing on Ethereum L1. So let's just talk a little bit about the challenges to replicating what Ethereum has achieved here.
Yeah. So I mean, so we briefly touched on it, which is, and I think you touched on it too when you're on sort of like, when you mentioned like your personal risk assessment, which is like, yeah, these other ones are like faster and cheaper or whatever, but like I really care about the security of my assets. Like that's what I care about, because I have a large amount of assets. And so, you know, the first thing is identifying like what do institutions care about, right? And above all else, like they care about safety, right? Like if you look at like what systems institutions are using, they're using like COBOL-based programming languages from like the 60s because they don't want to screw anything up, right? And so when you're managing trillions of dollars, like safety is your number one priority. And so, you know, so to answer your question, like can these other blockchains replicate sort of the safety of Ethereum? And I think that's like a real hard challenge. Like one, we talked about the security of Ethereum. You know, it's got the most validators, 1 million validators. That's going to be like super hard to replicate. They've got the decentralization, which we talked about the origin story. That's going to be super hard to replicate. And then there's a bit of a flywheel that happens, right? Ethereum has like sort of like that, you know, that brand that builds, that gets the BlackRocks of the world and the Coinbase and the Robins of the world building. And then that just accelerates other institutions to build on Ethereum. So I think slowing down that flywheel is also going to be a challenge. So so I think replicating the security, replicating the brand of Ethereum, replicating the proven track record of Ethereum are going to be pretty challenging for other chains. Yeah.
The only thing I would add to that is the incredible amount of network effects that Ethereum was able to accrue over the last 10 years. And that manifests in a couple of ways. It manifests through, you know, having the largest DeFi ecosystem, which we've already touched upon, but it also manifests through the number of open source developers it has. It has more than 2x the number of developers of any other system in crypto. It also manifests through the amount of security tooling it has. So security not only coming from its decentralization, but security coming from the fact that there are the most security auditing firms working with Solidity, that there's the most verified smart contracts on Ethereum. And so all of these things, day one, as a new ecosystem, you come in, these things take time, right? A developer ecosystem takes real time and real dedication to produce. You need tooling, you need documentation, you need an ecosystem around it. Security measures and a security ecosystem also takes time to produce. Liquidity, of course, takes time to produce. And so Ethereum started in such a unique way, but it's also put in the time. It's had 10 years to build up some of these network effects. It's going to be very difficult for others to chase.
Yeah, and like I'm listening to all the things that we've said, and you know what? I actually give people a bit of an out for not seeing all this stuff and being able to evaluate it and put a value to ETH on it, because at the end of the day, some of the stuff we talked about, it's not immediately quantifiable. Like you can't just, people aren't just going to CoinGecko and looking up the number of developers working on Ethereum. They're not looking at liquidity depth. They're not looking at the dev tooling. They're not looking at, oh, it's had 10 years of uptime with no downtime. They're not like, you know what I mean? Like you could go on. And that stuff, again, you can't do a DCF on it. It doesn't show up in REV calculations. Like I do give people a bit of an out. Like this stuff is immensely hard to replicate. And like you said, it's like, you can't just start out day one with this. It takes time. And I think that is starting to get noticed and being baked in more. And I think we're just early still to that. Like all of this boils down to me is like, what is the value of trust? I think we're finally now seeing what the value of trust is. And again, it's hard to quantify. I want to get into a bit of the risks for your thesis. You talked about some potential ways that all of this might be invalidated. What are some of those things that come to mind for you?
There are a few risks that we outlined. So the first one is that dollars could become the reserve asset and not ETH. Here, I think what's likely going to happen is there will be several key assets in this new financial system, just like we have several key assets in our traditional financial system. We have U.S. treasuries, we have gold, we have dollars. And so very likely what I think will happen is ETH and dollars will be complementary to each other. And ETH has these incredibly unique properties like native yield, like censorship resistance, that's unique to itself and other assets can't replicate. So that's risk number one. I think risk number two that we outline here is that CBDCs could displace USD stablecoin adoption. I think this one, it would be a real uphill battle for CBDCs to really displace stablecoins at this point, given how much of a head start stablecoins have and how much adoption it already has. But it is a real risk that, perhaps at the end of the day, CBDCs win. I certainly hope not, because that puts us back in kind of the closed system that really doesn't make sense here in the first place. And the third risk that we look at is that a competing chain could overtake Ethereum. I think, I can't remember who mentioned it, but this idea that, first you start with building something with great UX, low fees, and then over time you decentralize. Here, I think the pushback would be that displacing Ethereum is incredibly difficult given the 10 years head start it's had in decentralizing, given its culture of maintaining its decentralization, given how its origin story really can't be replicated again. We think this may be difficult as well. But I think it's really worthwhile to acknowledge and look at the risks to Ethereum really being the ultimate host of this new global financial system. And so those are the three that we've outlined.
Yeah. Plus one of that, maybe what I'd add is on the CBDC side, it feels like it'll be an uphill battle. I think as Americans, we, really value sort of our privacy and these things, and which is why, there's already like an anti-CBDC bill that's under consideration. So I think that people would, really sort of have a hard time with that. And in terms of the, to add to what Maria said about a competing chain, that's sort of faster, cheaper, that's moving towards decentralization. We've actually seen ETH, that's the most decentralized, move towards becoming faster, cheaper with the L2s, but also now there's, real-time CK proving, and there's a bunch of technologies that there's, scaling the L1. So it's not just a one-way direction where it's like, okay, ETH is decentralized and can't ever get like faster or cheaper, right? So ETH is moving in that direction just as much as the other guys may want to try to move it in the opposite direction. I would argue that it's harder to move in the way of starting less decentralized, getting more decentralized, than it is to go in the opposite direction that ETH is going.
One thing we haven't talked as much in detail about is the impact of L2s. So how do Ethereum L2s play into your thesis here around the stablecoin flywheel on Ethereum?
Yeah, so L2s actually play an incredible role in the Ethereum ecosystem. First of all, we talked about institutional adoption for ETH and for Ethereum. L2s actually create a framework for institutions to come in and say, hey, we can create our own rules. It creates customization or allows for customization for institutions. And I think that kind of framework makes it easier for institutions to come into the Ethereum ecosystem. So that's on the institution part. L2s also do a lot when it comes to scaling Ethereum, of course, making Ethereum very usable to new use cases by lowering transaction fees, by increasing speed. And ultimately, L2s don't just scale Ethereum, they actually create new demand for ETH. And we're seeing this through the amount of ETH that's bridged to L2s. We're seeing this through how much ETH is being used as the leading collateral asset on L2s. So on lending protocols and L2s, ETH is also the leading collateral asset there. And so it's also becoming the reserve asset in L2 DeFi. And of course, it's bringing in new wallets and new users and new use cases. So I think that part of this mainnet L2 relationship tends to get underappreciated. So worth highlighting that L2s really not only scale Ethereum, but create more demand for ETH as well.
Yeah, just plus one to that. Like if you look at the Robinhood L2 that they're building, they really think an L2 is the way that they can optimize trading of real world assets by customizing it. And so that customizability really enables these new use cases, which then expand the demand for ETH as collateral.
I don't think I could add any more detail here. I do want to go back to a point that Sanjay made earlier about it's not a question anymore about like, is Bitcoin a special snowflake? Is ETH a special snowflake? They both are special snowflakes. And I think like this report really lays out the reasons why Ethereum as a network is not to be compared with others. You can't go back 10 years and replicate that uptime unless you've got a time machine. And so that is really what's helping Ethereum as a network to run away with all this stablecoin activity. And then I'll just quote, this is one of like the final lines in your report, but the result of all of this that we've covered today is holding ETH is likely the simplest and most effective way to gain exposure to the growing stablecoin economy. So anyways, hopefully listeners are getting the point, and this is a great podcast to share with your friends who are maybe not seeing that connection yet between the growth of stablecoins and really the growth of Ethereum and the value accrual to ETH, the asset. But anyways, I want to remind our listeners that they can learn more about Electric Capital by going to electriccapital.com. You should also subscribe to their Substack, which is where you can get access to this amazing report, and highly recommend you actually read it aside from listening to it here on the podcast. It's electriccapital.substack.com. And then follow Electric Capital on X. Follow Maria Shen on X. Follow Sanjay P. Shah on X. We'll put all of that into the show notes too, so you get the right accounts. And then Maria, Sanjay, thank you so much for your time. Just such a pleasure to get to talk with you. Nomadic and I are always excited when we are investing in founders that have a backing from Electric Capital. If you're a founder, you should be reaching out to these people. And we would love to have you back in the future anytime. We had Ken on not too long ago. And yeah, so anyways, any final word for us though before you go?
No, thank you so much for having us. This has been really fun. We appreciate it.
Thank you so much. This has been a pleasure.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.